In this video, I'm going to show you a strategy using the time price opportunity, the TPO profile, or other people call it also the market profile. First of all, to understand this, it's just a 30-minute chart, and you can open and close it. Depends on the trading platform how you use it, right? So in this case, because it's zero chart, it's right click, letters and blocks on column. You can open and close it. And each of these blocks are just 30 minutes. Each of these square is one price increment, what is called ticks. It depends how you set it up. In our case, we have set it up always to 2 price increments per square. This means one square is always having 2 price increments until it goes next. And there are 2 different kind of things that I really love to look out on the TPO, the market profile, and then I will also show you how to understand areas. So first of all, the market likes to go from consolidation phase to other consolidation phases. And either we can open it and we can see here consolidation phases, because you can see here that there are blocks, it's just like a square, and you can see here just a lot of candles. The other way is just when you make it small, you just see that this one is just a whole area where the market is at, and this makes it right now very hard to trade. 2 things what the market profile has, the time price opportunity profile, right, is literally that it has either a weak low, and a weak low means if you just see like 1 that goes like here or 2 that goes over here, as you see here from a low, that means just like you have a block, you have your 1 that is standing outside, and this is called a weak low. And then you see here also until 3, it can be sort of a weak low. This is also totally fine. Every time you see that the market does this, like here or here, it shows us once the block is finished close, it will be here where my mouse is, or for this one, it will be here where the square here is where my mouse is. We can assume actually that the market will go in the opposite direction. Let's just take a drawing tool and I will show you this one. So that means we see literally starting here, because here the block is finished, the 30-minute closed. We can assume now the market is getting here lower, or once this one is finished, these 30 minutes, once the market is in this time period, we can assume the market is going lower. Once the market is here finished with these 2, and then the market is here, we can assume the market is going up. And the market will always aim for bigger structure highs and lows. That means like here or here. And then when you see here, it was recently a weak low, we can now assume actually the market is going up to this area here. If the market cannot do that, then just wiggling around as it usually does. And then once it pushes down, then of course aiming again for the biggest structure low. But right now it makes a lot of sense that the market wants to go up here to this biggest structure high, and we don't have the trading time right now. So it makes right now less sense. On the right side, you see also a volume profile, because the market is always about time, price and volume, all 3. And I think the best combination is always to use the price, the 30-minute chart. Literally it is that you can open and close, because you can close it, and then you have just a profile here, and this profile here just shows you that the market is riding like this. That means here the market has a lot of time, up here the market has a less time. That shows us the market wants to move here faster, up or down, and here also wants to move faster, up or down, also here back. That's it. So we know exactly, like in this area where the circle is, we don't like to trade that much. Also where we have here a lot of candles, and this is how to use also the market profile. Let's just make a whole analysis here, not just about right now what we just saw. Let's just make an analysis from another example date. And the cool thing is literally that when you see that the market is shifting higher up with these profiles, you see how the profiles is going up. Please take a look always on the left profile here, not on the right side, because the violet here, this is volume, and this is here right now the TPO, as you see here, because I can open this. This is just volume here. It's just very important that you understand which of these is here the 30-minute chart sort of, and which of these are literally the which of these are just the, what do you call it? Just the candles. In this TPO, was not just a day before. This is always, there are 2 kind of session types. The one is the ETH, the electronical trading hour, and the other one is the RTH, the real trading hour. And we always look at both. I like it sort of to have it in a combination, but in this profile here, it is split. That means like we can check here right now what was before our trading hour and what is at the trading hour. This is before the trading hour, and this is where you see always, because of the color also here, the violet thing is just like that the market is not moving that much. And then once you compare this to the blue, to the real trading hour, you can see that movement is way more bigger than usual. Way more, it is way more nicer here to trade in the blue area than on the violet area. And how we use this literally is that we check at both sessions. That means we check at a pre-session, what was the highest point, what was the lowest point at this session, and then we can see exactly like when this session starts here right now, 9 a.m. Central Time, then we know exactly 8:30 Central Time to be exactly, depends also on the time zone, if you're Eastern, Western Time, right, like New York, Central Time, New York Time or Central Time, or for example, if you're from California. The thing is, here's the highest point, here's the lowest point from the pre-session. Here you see the lowest point, here you see the highest point from the real trading hour. And this also transfers also to the next day. Because when we just look at right now, you find from the trading hour, this is the highest and this is the lowest point. And from the other one, from just the outside of the trading hour, you find like this was the highest and this was the lowest point. Usually what I love to use is just to keep it simple, that this was the highest and this was the lowest point that the market didn't touch yet. Because the market touched these references already, these are not relevant anymore. It's always about these highs and lows that the market didn't touch yet. That means we have number 1 and number 1, and we have number 2 and we have number 2 right now. And as I just stated, that when the market does a weak low, as you saw here, pushes up, makes more sense that the market goes up. And then there's also something that is called a strong low. And this is if you see here, for example, very like a tail of 4 or 5. Like literally you want to have a lot of price increments. Some people say just like 4 price increments or something, but I want to see like really that it's long and obvious as you see here. And if this is punching out and you can see here the market is doing some candles, it is very obvious that the market wants to go very often back just to the middle of a consolidation phase, because you see here the market is consolidating here. Market wants to aim at this area up here, and then once it presses here enough up, then we can expect the market will go here for the biggest structure high here, and then above to the left side, whatever bigger structure highs we have here. And this is how to use the TPO profile. I love to combine this all with using the 1 minute chart, because if we would trade here, it would take us hours to trade. I mean, like just if you look here at the 30-minute chart, it takes you 1, 2, 3, 4, 5, 6. That's just like 30 minutes increments. It's like there's 3 hours trading just to get this move. Maybe we need to trade in 4 or 5 hours even to get this. And instead, what I think is really good is to use this as a help. Where do we see the market is going at right now? That means like this price here, as you see, is very obviously denied. Market pushes here up, and then while we can see that this is the biggest structure high from the other real trading hour, that this is the high what the market is aiming at or just going nearby, then we know exactly, okay, now if this is a $5,000, $7,000, $8,000 movement, if I have enough leverage using this, because this is the reason why I love to trade futures, then how many times can I now adjust $100 in average and get $500 a trade out? And the trader who can see it, I think 3 times or 7 trading opportunities with each move, like that makes sense. Sometimes there will be moves we can't see it, but it's just about when you trade like maybe 2 or 3 times a week for 1 or 2 hours, you will have like 20, 30, 40 trading opportunities there to adjust $100 to make $500. Of course, not with a real money account first, please. I think like the person who can see 3, 4, 5 opportunities just in one move will have the higher likelihood of achievement, and that he will also enter the trade, than somebody who just has like, I don't know, maybe like 1 trading opportunity with the huge stop placement, adjusting $100 and to make just $50 or $100. Because in the end, it's all about quantity and some quality, and the mathematic will beat luck. Hope you can take something out of this. Wish you all love good trades. JT out.